The Rebel Capitalist Show.
Let's start talking about bond yields. I mean, everybody's talking about the 10-year. I didn't look today. I'm sure you have. And I don't know if it's up, down, but it's been spiking lately, and that just has so many knock-on effects in the economy. What are you seeing, and what's your take in the next 6 months, year?
Well, let's talk about that. That's great. Well, it went crazy last week. We had the 10-year yield like up and down like a yo-yo. And then Monday and Tuesday, basically flat line. I mean, nothing. We
Yeah.
had a market going all over the place, but a flat line 10-year yield after all that doesn't smell right to me. I think there's something going on here. I wouldn't be surprised if the Federal Reserve is already in here experimenting with some type of yield curve control, which is what they want to do. I mean, in my view, they want more control. They've been floating this idea out for a very, very long time. So why not take, let's say, the benchmark or the 10-year yield and play with it a little bit? Let's see if they can keep it stable. And they seem to have done that. Now, today it is a little bit higher. Where's the danger zone? It looks like it's somewhere around 1.51 or somewhere. The market did not like that. We also, obviously, as you know, need to keep our eye on the dollar. Crude oil is a player here. With regard to where the 10-year yield is going, well, I believe sincerely they want to keep it suppressed. They want to control the entire yield curve. They don't just want to target a part of it. They want full control. And now we're hearing about a new version of Operation Twist.
Yeah, I was going to ask you about that, Greg. Yeah, you want to
expand on that? Of course they are. In my view, they want control. What a better way to manage the debt market, which is the biggest freak show in the world. Actually, I'm not even going to curse because I call it a new thing, an SHIT show. It really is. It's a freaking shit show of epic proportions, and they're rigging the debt market to the highest order. Look, what has it done? It's inflated a massive stock market bubble. In my view, a massive real estate bubble, has caused distortions across the spectrum of asset classes. There's no real price discovery mechanism behind a damn thing because we don't have a free market. We have a Fed who's in here that's gone completely insane or sane. I mean, what are they doing? They're trying to fulfill their end game. Their end game is very simple. They want to buy it all. They want to own the world. So that's what they're doing, in my view. And yes, indeed, they will institute at one point, maybe they're already starting or experimenting with it, some type of yield curve control, and a new version of Operation Twist, which is just buying long-term bonds and selling short-term bonds to just rig the debt market even further. Before I finish, I think, look, they're not done. They're not done inflating asset bubbles. They want this as distorted as they possibly can make it. And then all of a sudden, when most people are not ready for it, at a time of their own choosing, they're going to turn this all around. So risk on, clearly we're in a risk on environment with regard to equities, is going to turn risk off. And we're going to see a massive shift in where cash is being allocated in this market across the spectrum of asset classes. And look, what does it mean for people like you, people like me, people that are watching this lovely show? It's opportunity. It's all opportunity. Every day I get up and say, okay, where are the opportunities, Greg? And that's it. And that's what I think you and me are all about. We're trying to tell people, hey, look, this is what's going on. This is what you can do about it.
Yeah.
That's it.
Where do you think the S&P would be if the Fed just woke up tomorrow and said, you know what, no more QE, we're done?
Oh, I wish I was smart enough to know that, but
because we're just going to go for price discovery.
Well, we would see this market fall thousands of points in the blink of an eye. Yeah. Where would the Dow be? Let me put a perspective on that. Let's talk about the Dow, okay? Because we could talk about the S&P. I don't care either one. At Dow 6,000, what did the Fed do? They got in here and they started buying it all. We don't even know where the bottom is of this market. Where's the true bottom? All they've done is massively inflate a stock market bubble. If, in fact, the Federal Reserve were to say, well, let's let a real price discovery mechanism take hold here, the market would grossly overreact to the downside. The market is an overreaction mechanism. This is how people like you, people like me, take advantage of the market. We know it's going to overreact either to the upside or overreact to the downside. The momentum that would build behind, let's say, for example, the Fed were to say, hey, let's let the market be a free market. Wow, what a concept. The market would crater. It would crater it would go way lower than I think anyone can possibly imagine. And maybe we would even break through Dow 6,000. I know people are probably flipping out right now, but we don't know where the bottom is. There is no bottom at this particular time. We know that the Fed established a floor, or at least tried to, at 6,000, but with enough momentum here, if the Fed really said, we're done, who knows where we could go. These companies, they do have value, but these companies obviously that people are investing in regarding the market, Dow, S&P, but who knows what their real value is, because all we have is a distorted environment. I mean, it's crazy. I don't got to tell you, I probably don't have to tell your listeners because they got it. You're keeping them on top of what's going on here, but no one, I think, is actually smart enough to know a few things. Number one, what would the debt market be doing right now if the Fed weren't fully controlling it? We don't have a free market. We have a rigged market. So we don't know the real valuations of anything right now. All I'm doing is taking advantage of this market because it's rigged, and the rigging of the market and realizing that it's rigged is our strength. And that's how we can capitalize on it. That's really my take.
So when you use that 6,000 number, is that what it got to during the GFC? Is that why you're referencing it?
Yeah, when the market melted down in 2008, I remember the exact month, we hit Dow 6,000. At Dow 6,000, the Dow went from 12,500, whatever it was, down to 6,000, and they would not let it fall anymore. The Fed got in here and started, capital injections, buying assets, and that's how they established the floor at 6,000. But we don't know where the bottom is. It's a bottomless pit. It really actually could be nearly bottomless, because if enough momentum got going here, we could clearly break through that. But that would be, in my view, a massive buying opportunity. If this market, let's say the Dow were to go to 6,000 or below, I can tell you I would buy it all. I would buy everything I possibly could, because I think that would be a screaming buying opportunity, because the market would grossly overreact. That's what it does. That's what we take advantage of. Fear and greed, the two factors that run this market. Fear is stronger. So people would be running to the door all at the same time. And then when people couldn't get anyone to buy what they're selling, they're going to keep lowering the price until someone buys it. And we've seen this before. This is how it will eventually play out. But again, I think people are looking at the wrong spot when they're saying, okay, Greg, I get this all the time. When's the market going to crash? I'm watching the Dow. No, you're looking in the wrong spot. You got to focus on the debt market. The debt market is where all the action is going to begin, in my view. It's a hyper bubble. It's a super hyper bubble. It's going to blow up at one point. Rates are going to spike, regardless of what the Fed is going to try to do here. I think they're going to unleash the Kraken at one point, and you're going to see a massive sell-off there in the debt market. What will that do? Well, it's quite simple to realize. That's going to put a lot of pressure on the stock market. Cash does not go to money heaven. It's going to go into other assets, and it's going to make a lot of people extremely wealthy if they're in the right spots.